Welcome to the Greater Victoria Real Estate Show. I'm Jane Johnston, realtor here in Victoria, and this is a show where we cut through the noise and talk about what's actually happening in our local market.
I'm Andrew Plank, also a Victoria realtor. We'll talk stats, timing, neighborhoods, and what we're seeing behind the scenes.
And I'm Jen Lowe, mortgage broker. I'm the numbers person of the group, and I'll chime in with the mortgage side.
Each week, we break down what the market means for you.
All focused right here on Greater Victoria.
No hype, no pressure, just honest conversations, local insight, and practical advice.
Let's get into it.
Hello, everybody.
Hello.
Welcome to the Greater Victoria Real Estate Show. I'm Jane Johnston with the Bar Hill Group at Remax Camosun, and I'm here with...
Who are you here with? You're here with Andrew Plank. I'm a realtor in Greater Victoria as well, and I'm with the Vibe Collective at Royal LePage. Yes, vibing it up.
Jen Lowe, mortgage broker with Dominion Lending Centers Modern Mortgage Group. Good to see you guys.
Yeah.
Good to see you. Together
collectively,
again.
How much we've got between Jane and I, there's 40 years of experience in this room. And then Jen, how many years have you been in the business?
I've been a broker for 14, and I've been in the banking industry since 1996. So,
oh man, you got us beat then for, we're each 20 years, and you've been in the banking industry since 1996. Okay, so was that 30 years? That's 30 years.
Ridiculous.
70 years experience talking to you today.
Yeah. Wow. Okay, but we're not old.
No.
I was going to say
everybody, put on your glasses and start trying to have a hard time reading your phone.
Okay. Let's get into it.
Let's talk about it.
Okay, today we're going to talk about short-term rentals and whether or not they're coming back. And because there is some news, but first of all, we're going to talk about financing. Go, Jen.
Yeah. So inflation. So we just got our recent inflation numbers for March. It did tick up a little bit, but it was basically due to gas prices. So in our core inflation number is still very soft. So it's the lowest it's been since 2020. So the chances of seeing an increase in interest rates on the variable rate side is pretty slim. The next time the Bank of Canada meets is April 29th, and we're not expected to see any change in the near future.
Okay. Well, good news for anybody on variable rates. And then the fixed rates have been a little higher lately, though.
The fixed rates have definitely gone up, and that's just due to what's happening in the Middle East, which is putting pressure on the bond yields and has pushed fixed rates up.
Okay.
So we're definitely seeing more interest in looking at variable rate mortgages, and it's important to explore the two different types of a variable rate mortgage. I was just speaking with a client short time ago, and she was not aware that you could have a fixed payment variable rate mortgage.
Right.
So So there's two types. One has a fixed payment. The other has a fixed lifetime or a fixed amortization of the mortgage.
So with a fixed payment one, does that mean the interest rate, it stays a fixed payment, but the interest rates vary?
That's right. So when interest rates are going down, more money is applied to the principal. Right. But when interest rates are going up, not as much is applied to the principal, more to interest. Right. So that's when we went through COVID. What happened is all of a sudden we were introduced to this term called the trigger rate, which I have to admit, being that I've been in the banking world since 1996, this word all of a sudden became a regular word in our vocabulary, but had never heard it referenced before. And the trigger rate is when you have your mortgage payment does not even include enough to make the interest of your mortgage. Right. So your mortgage is now completely going in the wrong direction. So
when the variable rates were going up higher and higher, and you were on a fixed payment plan, it got to be that that payment was just not going to be enough to cover the mortgage.
The interest.
The interest, because they don't care if you're paying the principal. So essentially, as your interest rates are going up, your baseline principal is not being paid at all.
That's correct. Yeah.
So what happened if you hit the trigger rate? Was it just a number and you could go over it, but it meant that your mortgage was going up? Or did it actually mean that you actually had to pay a lump sum or do something different with your mortgage?
In speaking, I've had a few different clients that have been in this situation, and the bank definitely hounds you. They want you to change your payment to catch up with your mortgage. But ultimately, what I've seen is nothing has to be done until your mortgage is up for renewal. When your mortgage is up for renewal, however, you're going to have a huge payment shock, as now if you started with a 30-year mortgage, you're renewing now at a 25-year. So it's something for anyone that's in that similar situation. We can refinance the mortgage back up to a 30-year, but if you go with a straight renewal with your current lender, they'll only renew you at a 25-year. So
Okay.
only significant payment shock.
So there are people who thought that they were going to be paying off their mortgage in 30 years. 5 years later, they have to get another 30-year mortgage because interest rates had gone so high that they weren't able to get ahead of their mortgage or pay down the principal. Okay.
Yeah.
We're not looking at having that kind of interest rate. Well, we never know, but this isn't something that people should be currently concerned about. Is that correct?
Yes. Yeah.
Okay.
I mean, they're saying, going through COVID, it was unprecedented times. Prior to COVID, again, going back to how many years I've been in this world, I mean, interest rates did not fluctuate more than once or twice a year, if that.
Yeah.
So we've definitely, we're still, I feel like we're still steadying and coming down from that, but we are in a much more steady environment than we were during COVID times, that's for sure.
I just remember thinking during COVID, I had so much more cash flow than I did like 2 years later. So I wonder, though, how many people saved the money that they had in terms of cash flow so that when things tightened up, they actually had the cushion to be able to afford to pay it.
Not very many people from my experience.
I was going to say, I don't think most people are just not that disciplined. There's very few people I meet that are so disciplined that they actually put the money aside for the rainy day, knowing they're going to need it one day. A lot of people are just, paycheck to paycheck, or they see their bank account numbers and they're not actually keeping that stuff in mind. So, yeah.
Which speaks to having a mortgage as forced savings versus, even though you're paying a lot of money, like I've just been doing my taxes and looking at what the principal versus the interest have been. And, I'm like, oh my goodness, I just need to pay these off. But then will they save money?
Yeah, I think too, financial literacy courses or understanding more about financial literacy and actually building those muscles of savings. I can't say that I am speaking from experience, but I am saying that it's a good thing, I think, for people to do. And I feel like not many of the younger generation really are on top of that stuff. They don't have the same discipline some of maybe our parents did, who had parents who went through the Great Depression and knew you've got to save for a rainy day because you never know what's going to come around the corner.
Yeah.
It's so interesting because I was speaking to my son about that the other day, because there's a lot of mindset around money. So that is it evil? Is it good? All this stuff. And really, you just have to look at it as a tool. And if you use it well, it can really do things. You can make it work for you. But if you don't use the tool well, it can be a real problem.
Yeah.
It definitely quite often is very much of a learned mindset too, right? I know I'm pretty strict on my kids with getting the credit ratings started, and because I see people that have had credit challenges, so I want them to get that going, get that credit card and pay it off each month, and but lots of people just don't know those simple things, or what we think are simple things.
Well, we each,
So
come at these things. It's the blind man with the elephant story,
Yeah.
where you only know your own section of the world, of the universe, and you're based on your own experience. So,
100%.
the mortgage broker is going to look at the numbers, the realtor is going to look at the houses, the carpenter is going to look at the framing. But
I grew up in a big family, and I'm the fourth of 5 kids. And I will say, every single one of us had a different approach. I don't know if it was learned I know now, looking back, I see there were beliefs that each of my parents had very different beliefs about money and what to do. But I looked at what everybody else did, and I was like, okay, well, I was trying to be smart right from the beginning. But remember, my younger brother asked me for money, and I said, I'll give you money, but you have to put 50% away and save it for a rainy day. And I'll give you twice as much money, and you put 50% away. And he's like, no. So funny. Anyway. All right, so let's get into the stats this week.
Sure. Okay, so in the last 7 days, we've had 455 new listings come to market, and compare that to last week, there were 504. So a little bit less week over week. 156 properties went pending versus 178 the week before. And then we've had 197 price decreases versus 178 the week before.
Crazy.
59 properties expired versus 38 the week before. So interesting to see these. The new listings are down and the pendings are down week over week. Not sure how to account for that, you guys. What do you think on that one, Jane? What's your take?
I think there's been a bit of a reckoning. I think people are looking at total days on market. I am talking to realtors who are listing later in the month. I was talking to one today, and I said, aren't you a bit concerned, pricing your house right now in a market where there's going to be an increase in number of listings? Just traditionally, this is just when markets build up, April and May. And he's like, I follow the 3 P rules: pricing, or preparedness, presentation, and price. So it's all 3. It's a combination of all 3. And I'm like, I'm going to take that. I'm going to run with that because it's true. You want to make sure if you're going to show up well, you're going to show up in a place where you're going to sell quickly, because otherwise I'm looking days on market are long.
Absolutely. You've got to hit all of those things to have a good sale. Do it fast, do it cheap, or do it right. Pick 2, Go ahead, Jen.
Do you think buyers are a little bit hesitant right now, just with the way the world is?
Yeah.
Yeah.
I have heard some people speak to that for sure. That being said, I don't see it dramatically stopping things. I just think it's an awareness. The conversations I'm having is with other people is there's just been so much chaos in general for a number of years, and uncertainty, that people have gotten more comfortable with uncertainty or more used to it. So it's kind of like, well, yeah, there's a lot going on in the world, but we can't let that stop us from living our lives.
Also, when is there not uncertainty? If you look at our last 10 years, when it was flat, when the market was flat, everyone's like, well, I'm going to hold off because the market's flat.
Yeah.
It's like, just write the offer if you like the house. I have done better owning a home than I have done in anything else.
In terms of investments and yes.
Yeah. Just owning one house and just sticking through it and being a long-term investor, I have done better than anything else. So, yes. And I think buyers now, is interesting. I'm talking to another realtor today, and she was saying, she is working mostly with first-time buyers for the first time in a long time.
Mhm.
So there's a lot of buyers who are coming in the market, and plus our range of houses, there's way more houses priced under even 900,000 than there were 3 or 4 years ago. So I think there's
Yep.
it's a great opportunity.
Totally.
Yeah.
Totally. I mean, I think about the times I've been working with clients over the last number of years and the prices I'm seeing. And I'm not saying that like they're not far off what they were last year or anything like that, but there's more selection now. And of that selection, there do seem to be some really, really good values that we just weren't seeing a few years ago, or they would have been snapped up like no time. And people are holding. And you know what, folks, if you're thinking of buying a condo, like condos have been soft. There's good value in condos right now relative to single family homes. There's great selection in condos. They are an awesome opportunity for a first time buyer. A lot of people I think are trying to skip up the property ladder and skip over condos. I'm not sure why, but it's a good time to buy.
It is a good time. It's the condo market's so soft. And we're going to talk about that actually
Yeah.
kind
People
of
have
in
been
the
patiently
show
waiting
today.
for us to get there, but we'll get there.
Okay, let's do our list of sale ratio. Andrew?
Sure. Yeah. So, I mean, what we look at here is what's the percentage of listings that are coming on market versus those sold. So based on the first two factors from the last slide. And this week it's 34.29. So a little lower than the week before at 35.32. So slightly down, not much of a difference, but slightly down.
Okay. And month to date, that's as of yesterday, we have 361 net unconditional sales. So these are properties that are sold. That's compared to 642 for the month of April last year. And total new listings were at 1,078. So as I was saying, we're down like 30% year over year on new listings, but our numbers are still high at 3,577. That's up over last year at 3,426. So we're seeing a big adjustment, I think. The reckoning is happening, and maybe that's what we need is just a little, like less people selling so that we can get rid of the current inventory.
I guess so. Yeah. I mean, we need to have some of the properties. I'm seeing properties that need to adjust their price and come into reality. And that will also help with those sales numbers. And then, of course, we do need more buyers coming into the marketplace if we were to try to meet last year's numbers. But I think these numbers are still not bad numbers. They're just lower than last year.
Yeah. And we're still in a healthy market.
Yeah.
So we're still.
There's a range. Yeah, there's a range to what a good market is. And this is not a bad market. I mean, people are out there actively. I'm really busy right now, actively working with lots of buyers and number of sellers and talking to sellers about listing their homes. There's a lot of bubble under the surface.
Mm-hmm.
Yeah. Jen's
Awesome.
nodding her head. Have you been talking to lots of folks, Jen?
Just today, my phone was pretty quiet last week, which was not, I was okay with that because I was on holidays. But this week, 100%, like today, I felt like I've been on the phone all day.
Yeah.
It's all those referrals I'm sending her.
Yes, thank you.
Excellent.
I think I feel
send me some
like there's
referrals too, Jane.
Okay, I will. I'll send you the new listings I have coming up, so you'll get the first dibs.
Please do. I do want to hear about the one on Selkirk.
Okay. Okay, so let's just talk about short-term rentals. I forgot to put the slide up, but there is rumblings on the horizon, especially around Kelowna. So short-term rentals, you do have to register a short-term rental with the provincial government annually. Yes.
Can we maybe take a step back and give a bit of a history on short-term rentals currently, like where we were at historically, what the legislation changes have had effect over the last few years, and then that puts into context where we're going here.
Sure.
Yeah.
Do you know I write like that too? I just jump right in and then I go back and introduce.
I am so bad for that. I always get right into it.
Right. Yeah. Okay. Well, who's going to talk first?
I'll say one thing. So
You-
when Andrew and I got into real estate, I would say the tail was wagging the dog. And what that means is that people were buying homes, they were adding the suites to them. They weren't regulated
Yep.
often. They weren't authorized. And then
Right.
people were then getting an income from it. And what it did is it justified an upsell in the home. And so municipalities and banks, lenders, that is, and, just safety wise, people were, and also different municipalities, issues came up. So I always talk about partying and parking and
Yep.
of course, safety. So the partying
Safety
and
in terms of
parking,
doing the job, right? Yep.
yeah, the partying and the parking has to do with your neighbors and whether or not you're infringing on their quiet lifestyle. And then and they'll report you. And then what happened was when they were reported, then the municipality would come in and they started to see, oh my God, like there's no fireproof
Yeah.
door. Wait a minute, there's
So,
no like smoke
Jane's
detector.
talking about the 3 Ps again: partying, parking, and permits.
Yes, and
Yeah.
permits. So then people started to complain, and then banks took an awareness in what was happening, and so then they decided, okay, we need to crack down on it. So this is rentals in general, and
Yeah.
then short-term rentals happened. Do you want to talk about that, Andrew?
Well, I guess the Airbnb, the VRBO, but the whole industry of Airbnb really developed and evolved. Went from Airbnb being something that, hey, I'm going to travel and I'm just looking for a couch to sleep on, to people discovering they could actually create really, really good incomes by setting up a space in their home, or setting up a really unique space in their home, or something that was special for people to come to travel to. And there were whole businesses even designed around the cleaning of these condos or rental units in a house, the property management of those. So it became a real business, and people started turning their homes into this additional income structure that hadn't really been anticipated. And like anything where there's an extra income that the government's not getting any income out of, not only that, we also ended up with an environment where the regular rental market got very, 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 very tight. And so we ended up having this tension between the Airbnb property and the standard rental property. And the government said, look, we need to make housing affordable, available to just regular people. And so it's the Airbnb that's going to lose here. And so legislation came in to dampen that.
And the other thing is there's a few safety things. So first of all, regarding the partying, so these Airbnbs were in houses that weren't occupied by anybody who was living there permanently. So that was literally a house in a nice neighborhood. And I stayed in one of these in Toronto, where you cram in 6 or 7 people, and then you invite all your relatives over, and they you have a party, and hopefully you have a good tenant that leaves the place in good shape, which we did. But there are people who abused it, and then what happened, it's at a 4th P, which is police. So you had to have police presence happening. And I know for my sister in Ontario, where she lives, which is kind of cottage country, people were partying, and then there were some fatal accidents happening. Yeah. And so you have an increased cost for policing, and so they want some money and funding for leasing these houses.
Now that being said, and so my partner has a condo downtown. We were living in it together. It's currently an income producing rental, but that building did not allow short-term rentals. The bylaws said no short-term rentals. And yet, we would often be, coming home, going to the elevator, and there's this nice couple with a couple of overnight bags, or the little small luggage, going up to the 3rd floor. And you just know that we knew that there were a few Airbnbs in there as well. So people were doing it outside of bylaws and so forth. But the other side of that is there was legislation, there was municipal zoning that allowed for, and there were purpose-built buildings that were built with this in mind. And the most recent legislation, not this current one we're just about to talk about, which we're doing, this is quite a preamble now, but this legislation that's cut down all the short term, even cut down, units and buildings that were allowing it and that were being run and were part of, a pretty comprehensive economy.
So what was happening was the hotel industry got really upset because all of a sudden now they had competition for people looking for accommodation, and they were saving money. They didn't have to eat in a hotel. They didn't have to, the cleaning was all happening by the people who were owning it. And then, and what Andrew was saying, so places like the Union and the Janyan building, these were short-term rentals. People would come in, and everything was set up, and it was set up really well, actually. And it was kind of like a low impact living, and they were right in the community. And I'm sure they had recurring visitors and people who respected the community, but they also, again, had this partying. But the price of these condos was actually worth quite a lot because the potential income from the condos was very high. And so when the legislation changed, all of a sudden, there was a 10% drop in the value of these condos, like overnight.
Yep. And we're still working through that, which is one of the reasons why the condo market is slower in Victoria, because those people who had that income producing unit that they can no longer do that with had to decide that they were going to either rent it or sell it. And a lot of people decided to sell. And that inventory is still working through the system, although I'd say it's probably mostly worked through the system now. So where does that leave us today?
Okay, but let's just talk about so what's happening though is also there's been a change in federal legislation around and provincially around foreign students coming in. And so there's less pressure now for people to rent units because there are less students. So the government imposed this because they wanted students to have good living accommodations. Only what they did was, instead of having like 100 kids come in, now there are 35 coming in. So there's been a significant drop, like a 65% drop in the number of students coming in. And so now that's why the condo market kind of has deflated.
So our vacancy rate has gone up.
Yeah.
So the
original argument for not allowing short-term rentals is no longer as applicable. And so where we at today is now, I think coming 2027, they are considering, I don't know if this is legislation yet. They have allowed this already in Kelowna. But if you have had 2 consecutive years at 3% vacancy rate or higher, then the municipality or the city can choose to opt out of the provincial rules. So it's not a given, but it opens up more options.
But they are still requiring all over the province and still in Kelowna that owners need to register their short-term rental units with the government so that the government's aware. Yep. And they have to also have a license with the city of Kelowna, and they have to follow the zoning rules.
Yep. So there's still more, I guess, paperwork and rules to follow, but it is going in what I would call the right direction, where allowing for more flexibility and also being more more aligned with the reality of the moment. So if it's a really, really tight rental market, no Airbnb is allowed Airbnb is allowed only as per the provincial bylaws or provincial rules, but now you've got the option to opt out.
And just want to say that there are municipal rules as well regarding short-term rentals. So generally, they want to see short-term rentals in places where people are actually living so that they can supervise their tenants. But some municipalities, like Saanich, for instance, doesn't want Airbnb. And so, but if you go on VRBO, you might still see them.
I guess one other thing to point out, and we're sort of talking all this through, is this is also really only applicable in higher density areas. You can Airbnb in some of the smaller municipalities or where there's less population. So if you're at all, check the Airbnb rules. If you're considering doing Airbnb, be aware that it's partly geographically based, but also it's just good to know that this is opening up again. And I really feel for those people that sold off their units, that at some point this is going to open up again, and we're going to actually have the ability. We need the ability for some of these buildings where you're not going to find somebody who wants to live in a 130 square foot unit, but they might rent it overnight.
And I just want to say, so I went to our online chat group that Andrew and I are both a part of, and I typed in short-term rentals, and there were so many realtors putting in there that they wanted a short-term rental for a client.
Yeah.
And what it does too is it allows somebody who maybe is between sale and purchase, or purchase and sale. It gives them flexibility so they can come in and come out without having to rent a hotel. Also, hotel rates have gone up, but it also, provides an income maybe for people, seniors and stuff, and also maybe company for those people who may want to have people in their home.
Well, originally an Airbnb was truly, someone is coming into your home and you're providing them bed and breakfast, right? It wasn't just, here's a locked off section. I'm not actually going to see you. I'm going to send you the access code a day before you arrive, or on the day of your arrival. You're going to come in, you're going to access it, you're going to sleep overnight, you're going to leave, and I'll never see you. And you might get a nice croissant or something at your door in the morning, but that's kind of it.
Yeah, and this is worldwide, this issue, what we're talking about.
Yeah. So I guess for everyone, again, this is just an awareness that, things are always shifting. And it's good to see that if you do own an Airbnb-like unit or are considering doing it, there may be some changes. It does really depend on what the city of Victoria does, or municipality of Saanich, or, whoever it is, wherever it is you live, whether or not their vacancy rate is at 3% for 2 years, and whether or not they decide to opt out of it. And I guess my question then becomes, let's say they opt out of it and then the vacancy rates tighten up. Does it then mean that they have to cancel again the year after, and you don't have the ability to have any kind of assurance that you can build a business on that?
Right. Which is why I was saying there's a bit of a pendulum swinging back and forth. So people just have to be sensitive. There were short-term rentals in places like Shawnigan, and they work. I mean, I know there are people who live there who are not appreciative of the fact that there are short-term rentals there. They don't want them there, but it is a great way to kind of help with the ebb and flow of real estate purchase and sales and travelers.
Yep.
Okay. Any questions, Jen?
No questions. No, it's I find it very interesting when we get these new rules in place, and then they kind of take a step back and go, maybe we're seeing a bit of implications here that we didn't completely expect. So it's good news that we've got potential changes coming.
Yeah. I think the main thing that our colleagues should keep in mind, and those listening should keep in mind, is double check, learn what's actually there. What you're going to hear probably on the street is, oh, the government's allowing Airbnbs again, because that's the baseline headline without diving in where there's all of the restrictions. And I just know how this works. People are going to go out there and hear this and go, okay, great, I'm going to go buy an Airbnb, or I'm going to start setting up my home again as an Airbnb. But that's not actually potentially allowed. But I think the base headline is things are opening up for Airbnbs. The reality is probably really not that much.
Probably not in Victoria politically.
Yeah. Greater
Victoria.
It makes sense for Kelowna though, because myself, I've rented an Airbnb in Kelowna. It was great. On Okanagan Lake, and it was wonderful.
Mhm.
So I'm glad to hear for them that that's opening up again.
Yep. Yep.
And
then
don't
maybe
forget,
we'll
if
go
you
to
do,
Kelowna and get an Airbnb someday and enjoy it.
don't
'Cause
forget,
there's
if
definitely
you,
a different experience than being in a hotel. Sorry, Jane.
Mhm.
if you do have a short-term rental, to register at the provincial legislation. Where is it? The provincial short-term rental. I think it's about $450. So don't forget.
Yep. Yeah, you won't get on Airbnb without it now.
Yeah. Okay.
I think we've squeezed this lemon as far as we can go.
Alrighty. Andrew,
Yeah.
you want to close us out?
Sure. Yeah. So thank you so much for, again, your time today, for listening to us throughout all of this. We really appreciate you. We would love to hear from you. So please subscribe, please comment, please share, and, reach out. So that's it. That's my take. So I'm Andrew Plank. I'm with the Vibe Collective, a team at Royal LePage Coast Capital Realty in Victoria, BC. And my number is 250-360-6106. You can reach me directly at info@andrewplank.com.
I am a Jen Lowe mortgage broker with Modern Mortgage Group through Dominion Lending Centers. I can be reached at 250-217-4925. Email is jen@jenlow.ca, and my website is jenlow.ca.
All right. And my name is Jane Johnston. I'm with the Briar Hill Group at Remax Camosun, and you can reach me at 250-744-0775. And you can reach me by email at jane@briarhillgroup.com, or actually briarhillgroup@gmail.com is better. And you can check out our listings. We do have some fabulous ones coming up at briarhillgroup.com. I'm sure Andrew does too. And you can follow us on Instagram. I'm at realtyteacher_remax_Victoria. Andrew's at Plank Andrew, and Jen's at JLo Mortgage Broker.
Yes.
J-Lo.
JLo. We're on every Tuesday. We do record at 2:30, but we're going live at 4. So be sure to watch us, and we'll see you later. Have a great
Thanks, everybody.
week. Bye-bye.
Bye, everyone.
Thanks for joining us on the Greater Victoria Real Estate Show.
We're here weekly, bringing you up-to-date insights on the Greater Victoria real estate market.
Make sure to follow and subscribe on YouTube, Facebook, and wherever you listen to podcasts so you'll never miss an update.
We'll be back next week with more clarity around what's happening and what it means for you.
Okay.
Thanks for joining us on the Greater Victoria Real Estate Show.
We're here weekly, bringing you up-to-date insights on the Greater Victoria real estate market.
Make sure to follow and subscribe on YouTube, Facebook, and wherever you listen to podcasts so you'll never miss an update.
We'll be back next week with more clarity around what's happening and what it means for you.